In the last year, we have witnessed so many miracles from the crypto markets. Bitcoin bucked up from $3,800 to higher than 34,000 this year. DeFi is booming, starting changing the financial ecosystem fundamentally, and the crypto itself steps on the hall from the bleak corner and becomes a new star welcomed by institutions and crypto markets. Founded in December 2018, Huobi Futures also flourishes and matures gradually in 2020 through continued improve in product varieties and innovation in product functions. So following our first product, Coin Margin Futures, in March 27th, we launched coin margin swaps and ranked first in the world in terms of 24-hour trading volume within only 45 days. So in September and October, we introduced USDT quoted options and USDT margin swaps to cater to more market needs. Based on the quarterly reports from Token Insight, Huobi Futures has ranked first for 3 continuing quarters this year in total trading volume in the year of 2020. We have been committed to improving user trading experiences, for example, designing user-friendly functions, upgrading our risk control system, and etc. So today, we have two very good guests to discuss about the growth of Huobi and the whole industry in 2021.
Hello, everybody. So I'm Christian. I'm the CEO of Cudera, which is a Swiss-based prop trading company. My personal background is in academia. We started the company in August 2018 after I looked at some of the data that I saw from crypto derivatives and thought we would probably do pretty well if we would start market making. We have just joined Huobi in, I think, November this year, October or November. And it's been going quite good with you guys. So happy to talk to you.
Well, let me introduce myself. I am Ingyu. I am professor at the Korea Advanced Institute of Science and Technology. I'm theoretical physicist by training, but I worked on the artificial intelligence and then they built the character recognition engine for Chinese character and the Korean characters, and then speech recognition system for Korean languages. And then I applied this artificial intelligence technique to the market making, and then the arbitrage trading, and then the statistical arbitrage trading at the Huobi derivative. So I'm looking forward to many developments you introduced to the Huobi derivative market, and then I'm really trying to explore the various new features you have introduced to the derivative market. Thanks.
Thank you. Welcome to Huobi Insider, Professor Ingyu. Okay, so let's get started. So my first question is that according to the data obtained from Token Insight for derivatives industry, the total transaction volume of the digital asset derivative market reported for the third quarter of 2020 reached 2.7 trillion US dollars. So a year-on-year increase of 160% from quarter 3 in 2019. So that's a huge increase in total trading volume for derivatives market. So what do you think are the main factors for this rapid increase for the derivative trading volume?
So I think the first most important factor probably is fees. Derivatives are just way cheaper to trade than spot markets. And so if you have a signal that is not strong enough to be exploited on the spot market, you can still do it with derivatives. Then the second reason might be macro reasons, which I'm not an expert on, but I mean, we've seen a lot of increase in institutional volume. We saw a lot of new market entrants, and I guess this is kind of like influenced by monetary policy and the story of Bitcoin as an inflation hedge. And then the third reason, I think, and which is for me the most interesting one, is that this system has grown to a large complexity. So we see a lot of different derivatives nowadays. We see DeFi. We see this whole decentralized market, like the marketplaces we have are on Asia and Europe and the US marketplaces. And this complexity kind of leads to more volume. Because if you think about it, if there's like, for example, a market buy on the perpetual swap on Huobi, maybe a market maker gets lifted and then he hedges his position maybe on Huobi spot, which leads to a price dislocation, which somebody else uses to do an arbitrage between Huobi and Binance. And then this might lead to a liquidation. And so we have a lot of these kind of connectedness in this market that sometimes can lead to positive feedback loops, basically, if you think of a complex system. So this kind of drives volume up. The more complexity, there will be more volume, I think.
In addition to what Christian has described, I think the fundamental reason for the upsurge of the derivative market trading volume is that the many IT companies, they have a huge cash equivalent in a balance sheet. And in the old days, they just kept the short-term the debt or some kind of equity for the cash equivalent. But now, due to this COVID-19, the purchasing power of the cash has declined sharply. So they think that the Bitcoin and the Ethereum has the very good cash equivalents compared to the old days. So one example is a MicroStrategy or Square, and they begin to replace the $1 billion cash with the Bitcoin and the Ethereum. So this kind of investors are quite different from the old traders. They do not look for trading purposes. They look for the Bitcoin and the Ethereum as the cash equivalent. So they buy and hold them for a long time. And then the trading volume upsurge has accompanied by the hedger, because they have to hedge this core Bitcoin and the Ethereum underlying asset. And then there is also retail traders who want to benefit from the price fluctuation. So these two are added volume to the derivative market, as well as the market maker cross-platform, like Christian has described, Binance and the Huobi and some of the platform. And this really exploded in the trading volume of the derivative. That's it. Okay, thank you.
So quickly to sum it up, Christians think that basically there are three reasons, right? So first is fee. Trading derivatives is much cheaper than spot. So it's good for institutions like you guys to trade derivatives market. And then secondly is institutions that are coming into the market and monetary policies and etc. So this whole market situation is making derivatives market trading volume increasing. And thirdly is because we have a much more complex system now. And people do, cross exchanges or cross products trading. So that's how stimulates all this trading volume for derivatives market. And then Professor Ingyu believes that basically two things. So first, the COVID-19 situation and a lot of the macroeconomic situation that's making purchasing power of cash decreasing, and therefore a lot of institutions are now coming in and buying and holding Bitcoin. And then secondly, when they already have crypto, they have the needs to hedge. So I think this all makes a lot of sense, and I agree with you guys. So what we see from Huobi is that institutions definitely coming into the market, and I think that contributes to a lot of the volume that's increased from last year to this year. So because I personally I oversee the whole institutional business sector at Huobi, and I can see this trading volume percentage increasing so much. Share a little bit with you that beginning of 2019, institutional trading volume on Huobi was only 17%. And now spot market trading volume made of institutions only is already 50%. And for futures is 60%, and for swaps is even more, so 65%. That's how much this whole user structure is changing. And this is proof that institutions are actually coming into the market and they're now trading. And I think there are a lot of reasons going behind it. So first is that Bitcoin itself is getting a lot of consensus, from the mainstream and are accepted by mainstream because regulations are having a big step forward. In the year of 2019 and 2020, we see a lot of countries who are giving much more clearer instructions for how to regulate crypto market and how to regulate exchanges, and they're issuing licenses to exchanges. That's how we got the license in Japan. It's a very strict country with financial related regulations, and also in Gibraltar and etc. So we're seeing that with this whole regulation more clear, and we see governments are putting their eyes and attention into crypto. That's a signal to institutions and old money, and that's how they can actually get involved in crypto and can come and buy crypto. And as the bridge, Huobi is playing the role as a bridge connecting the traditional world and crypto world. We want to be able to provide a compliance and safe system, a platform, and also with varieties of derivatives market products, because institutions are more professional. They need to hedge, they need to do cross margin, they need to do they need options, they need coin margin based, they need USDT margin based swaps and futures. They need all of this, and they need leverage, and they need a lot of different things. And that's why we are putting in a lot of resources and efforts to develop these products, and trying to provide with you guys professional services so that you can feel the same when you trade crypto and when you trade in the traditional market. Okay, so on to my next question is that so a little bit milestone for Bitcoin, I think when it hits $20,000, and before that moment, trading volume is lower than 25 billion per day on average. And then after that, it kind of like it went by so much, and it went up to 80 billion, every day on average. And we've seen, we've been around for 7 years, and this is kind of the best data we've ever seen. So what do you think of this Bitcoin price, and how do you think it will affect the derivatives market? And according to your speculation, do you think this bull market is going to continue? People are looking forward will come in 2021.
I think that the fundamental reason why the institutional investor has increased so much in the recent years after the landmark price of $20,000 for the Bitcoin. Now, the reason is in the old days, the most institutional investors traded 4 different kinds of assets. One is the equity, like S&P 500, and then the debt market, treasury bond, and then another one is the forex market, and then the commodity. Now, the correlation between the cryptocurrencies and the other 4 assets are quite low. So from the Markovitch diversification portfolio, the institutional investor has a very strong motivation to invest in a cryptocurrency. Now, to invest in a cryptocurrency, they need the different kind of instrument, like an underlying spot market, that's a fundamental. And then they needed the future market and the option market for the derivative. But the future market, they have the burden of rollover for each delivery day. So you have a swap market. So with this portfolio of instruments of the future market, swap market, and the option market, the institutional investor are quite comfortable to invest in the cryptocurrency as a really the diversification of their asset. So as long as the correlation between the cryptocurrency and the equity and the other assets remain low, if it is uncorrelated, I think that the institutional investor have a very strong motivation, continue to invest in the cryptocurrency, and then as a result, that your trading fees at the Huobi will skyrocket from these investors of the institution.
And Christian?
Yeah, so I think like Professor Ingyu already said, there's a lot of institutional interest. This whole rise was probably the rise in price, I think, came mostly driven by monetary and fiscal policy. So people try to use Bitcoin as an inflation hedge. There's this story going around that like Bitcoin should have about a similar value as gold somewhat, right? So, and I think this is quite a strong story or narrative. And I think this narrative will continue in the long run, at least. However, for this to make sense, I think the volatility of Bitcoin needs to go down so that it can be comparable to gold. And at the moment, I don't see that happening because this whole market is really leveraged. Like a lot of people are trading with a lot of margin, which always can lead to a lot of liquidation cascades. So this drives, of course, a lot of volatility. And I think in the short run, the price will stabilize a little bit, and maybe like in the next couple of weeks, we might even see some downturns. However, this is my personal opinion, and from a professional standpoint, I mean, we're mostly delta neutral, so I don't know. I mean, don't believe me, believe the market. I couldn't say more, really.
Yeah. So first of all, I agree that this whole Bitcoin price taking place has a lot to do with the whole monetary policies, and as you guys all mentioned, that cryptocurrency itself has very low correlation with a lot of the other stuff like S&P 500 or even gold and silver, and comparing to all of these other things, the correlation is very, very stable. It's always between positive and negative 0.06, right? And but this year, in March, when we see that what's happening with the stock market and Bitcoin is also affected, it's not like zero correlation. But I think that giving Bitcoin price is increased by so much, and there's definitely going to be a lot of volatility in the near future. And where there's volatility, I believe it stimulates trading volume for derivatives market. There's going to be even more volume for derivatives market, and well, we can't really forecast any of the price for any coin as well. But I just believe that if we think monetary policies and the macro whole economic situation has a lot to do with Bitcoin, and has a lot of affections on Bitcoin price. I still think year 2021 is not going to be a very easy year, and for the whole financial market. And I still believe that Bitcoin is a very good asset for hedging or for alternative investment. So that's one of our goals as well, to empower more and more families to be able to hold Bitcoin in the near future. My next question is that this year has been all about DeFi. By late October, total volume locked in the whole decentralized finance applications hit 12 billion. And the growth reflects increasing willingness of traders to speculate on this very, very narrow sector. And many institutional and individual investors saw opportunities in the whole summer DeFi boom. But due to insufficient principal or high borrowing interest, or it's just very, very not easy to operate, to really participate in DeFi. Many people were not able to seize the opportunity in time. So regarding this phenomenon, what advice do you have for investors?
So me personally, I don't have much experience in DeFi, and I was quite critical in the beginning, but now I see it as a possible alternative to centralized exchanges. I think DeFi will always be a very expensive venue to trade, because you have these automated market makers, which probably are not optimal. It's very easy to front run in most of these DeFi locations, but they probably have a role to trade assets that centralized exchanges are not willing to or cannot list. This doesn't need necessarily to be like stuff that cannot be listed due to legal reasons, but it could also be just because the market is too small. So basically, like everybody can list a coin on DeFi exchanges, right? So there could be very interesting products also rising out of this whole ecosystem. So I'm definitely keeping my eye on it. We're currently not trading any DeFi stuff, but we will definitely keep an eye on it. As like a advice, if you want to participate in this space, I think it's very high risk, very high return environment. So you have, I think, like from my observations, you always have to be early, but you have to be very careful. And I think like in the long or in the midterm at least, if you want to participate, I think it's important that you understand the technology and the contracts. And I think like in the long term, this whole liquidity mining thing and liquidity farming thing will go away somewhat. But I don't really know.
Yes, as a Christian has described, there are two different markets. One is centralized finance, like Huobi, who has the custody of the Bitcoin and the Ethereum, and then the traders trade very conveniently. And they also, in a centralized market, they support the spot market, the fiat to coin trading, as well as the ETP, like the exchange traded product, like a leverage product of 3 times or inverse ETP. But on the other hand, that Huobi or centralized market begin to demand more and more in regulation, like AML, anti-money laundering, and this also that the know your customers, KYC. This irritates some of the major investors because they are not drug dealers, but they have so much that they averse to this kind of regulation. So I think there are definitely decentralized market. Now, to enter this decentralized market, as the Christian described very well, one needs a technology because you need the smart contract in a Solidity program. Also, you need the Web3 in either Python or some other languages in JavaScript. So these are very technology oriented. And as you, Christian, mentioned, somehow this kind of arbitrage trading in a decentralized market will become smaller. But if you look at today's market, the arbitrage in a decentralized market is huge compared to the centralized market. So I think there are extreme large potential to make a profit in a market making or between the decentralized market and the centralized market through the Solidity and the Web3 program. So I think that any kind of the trader who knows his technology very well in either Solidity or the Python or C# or Rust, they can profit both in a decentralized market and then the centralized market. Now also the trader or the clients begin to have both needs. One is the very well centralized regulated market because they have to go through the auditing of their balance sheet and the cash flow statement from the audit, the CPA company. But on the other hand, they have a strong needs for decentralized market without any regulation because they are not illegal, but they want to have some kind of the market to keep their privacy strong. So I think in the market, there are very strong for the centralized market as well as the decentralized market. Now, as a trader, we want to benefit from both of these. And from my perspective, decentralized market volume will increase precisely because of this, because of this the strong privacy. So if we have a strong technology in the Solidity for smart contract and then the Web3 programming, as well as the market making in a decentralized market, we can build some kind of hybrid between the central market and the decentralized market. And then we can benefit very handsomely from this kind of investment.
Yeah, very good point. So first, speaking on behalf of a centralized exchange, I have to say that decentralized exchanges have advantage, and I think the whole AMM system works really good. It solved the order book and liquidity issue where a lot of smaller exchanges were facing in 2018 and 2019. A lot of them were shut down. They just couldn't do it, and it's a very smart way to solve those problems. And DeFi itself has been around for almost 2 years, and it has been developing for such a long time, and now it's taking place. And I believe that us and the DeFi world have very complementary, say, skill sets or things that we can offer to the whole crypto market. And also, Huobi is doing a lot of things trying DeFi. We have our whole DeFi labs investing for DeFi projects, and also we have our Hackle, it's a Huobi eco chain for DeFi developers to be able to build their own dApps. We're putting in some resources to help with DeFi booming, but like I think like Christian said, there are a lot of risks involved. For example, those codes can be audited or not. The smart contracts can have problems, and there are people having attention in this one sector, there can be frauds. So I wanted to warn our customers, our clients too, to be aware of the risk that's involved with DeFi. And what we can do is that for listing projects, we will be putting a lot of attention to the whole due diligence process. It's a very interesting fact that when in the DeFi market and DeFi space, there are a lot of value locked, right? But percentage of Bitcoin is still very, very low, and not a lot of institutions are in the DeFi world yet. So I'm interested to see how DeFi is going to go in this new year, and we'll continue to be paying attention and to see what we can do and what we can offer to our customers' needs in the DeFi space. Okay, so my next question is that among all the product lines of Huobi, what is the most interesting to see is that the latest one, USDT margin swaps, which is launched only October 26 last year, is growing strongly with a total volume, as of December 4th, over 60.5 billion US dollars, accounting for 22.7% of the trading volume of all units. So with this, I wanted to ask you guys as institutional, investors and traders, can you share with us one or two strategies you really use in the USDT margin swaps trading, and why do you like this product in particular?
Now, I think that from the trader's viewpoint, the most important thing is that the liquidation price. So if I want to increase the volume too much with a high leverage, then there is also danger of liquidation. So we want to be safe away from the 2 sigma of the price volatility from the liquidation price, because of 95% of the certainty. Now, on the other hand, the new product by the Huobi, the USDT swaps have a cross margin that's extremely new revolution compared to the isolated margin. So I can give you one example where this USDT cross margin can be extremely useful to the trader. Let's suppose I do the trade of pair trading between the Bitcoin and the Ethereum. Now, the Bitcoin and Ethereum are more or less correlated, but there are small fluctuations. So if we do pair trading, selling the high priced one and then buy the low priced one, and then in the long run, but there are some uncertainty how long is it? It can be a few days or it can be a few hours. But in the long run, they will go to revert back to the mean. So they have the mean reversion very strongly between the Bitcoin and the Ethereum price. So from the trader's viewpoint of the pair trading between the selling Bitcoin and the buying Ether, the high price of the Bitcoin and the reverse unwinding the price if the situation reverses, the liquidation price can be almost limited because in a cross margin system that the USDT measures the risk from the hybrid delta. So delta of the Bitcoin exactly cancels over delta of the Ethereum pair trading. So one need not worry about that the liquidation price at all. It's extreme revolution from the viewpoint of arbitrage or statistical arbitrage trader. So I think that the USDT, the cross margin system can be extremely useful for the traders with pair trading. And this will increase the volume as well as the order book of the Huobi. So they will invite the more traders from the hedger and then the retail trader, but as well as from our traders' viewpoint of the statistical arbitrage. That's a really blessing because usually they combine several different assets like Ether and then the Bitcoin was almost impossible. Some trading firms like the Chicago Mercantile Exchange, they have a span, the initial of a standard portfolio analysis of risk. So they have a combined hybrid system and they measure data and they demand the liquidation price. So that kind of thing is very expensive to accommodate and implement in the exchange. But the Huobi have revolutionized this kind of a pair trading or hybrid system with this cross margin system. And our desire is that if you include also option, then we can have a trader like option and the swap as a delta neutral hedge. In that case, the option market will be very activated because up to now, your option USDT is a separate system from the USDT swap. But if you combine this option USDT and then the USDT swap as a delta neutral hedging, then the option market maker or option trader can really benefit by the delta hedging, keep the delta almost zero all the time, and then they have enormous potential. And there are enormous the traders who want to trade in the option market, but the option market trades is very sparse, like one trade per hour or something like that. But if you allow this cross margin system between the USDT swap plus USDT option, then there will be new spectrum of the potential for the market maker who trade the option as well as the swap in a delta neutral hedge. So they can really realize the profit from the delta neutralized between the option and then the swaps. And then if you have this kind of cross swap, the liquid cross swap system, and then they need not worry about the liquidation. So they can really trade enormously. And I think the next step, but even today, the USDT swap, which can have a cross margin between the Ether swaps and then the Bitcoin swaps and all the Litecoin link swap, it's extremely opportunity for the good traders who have a very careful analysis of this pair trading, the correlation between the Bitcoin and the Ether, using that this correlation function or co-integration technique, they can really profit with this cross-margin system.
The USDT margin swaps are really, they help a lot not getting liquidated. So it's quite a bit easier to hedge your positions with USDT margin swaps. I think like in general, like these inverse perpetual swaps, so the coin margin swaps, I think they're basically like a historical byproduct. If you think about it, you wouldn't come up with the idea of the inverse swap, but I think it was basically because exchanges didn't want to touch fiat, and USDT probably didn't exist back then. So you didn't have a different choice than to margin your perpetual swaps in BTC. But now that that is gone, I don't think there's too much of a reason to use these products. I mean, they exist and the markets exist, so it's probably going to continue to exist. But if we would come up with perpetual swaps again, I guess they would be margined in USDT anyways. So if you ask us about strategies we do with USDT, so for us, it doesn't really matter. We are really a high frequency trading operation. So we are mostly bound by what the market is giving us, and we don't need a lot of leverage to do that. So for us, we basically just run a very similar market making strategy as we do on the coin margin swaps. We're trying to buy and sell at the same time, basically, if you want to break it down. We try to buy and sell at the same time, capturing the bid and ask spread as well as the rebates.
I totally agree. It's all based on what strategies and what kind of position that you take as a trading company when you're choosing product. So speaking of which, now Huobi Futures has a kind of one-stop derivatives trading platform with coin margin and USDT margin, future swaps, and also options provided. So can you share with us which one of the product you trade the most often, and what factors you usually consider when you choose what product to trade from your perspective and from the market perspective?
Yeah, so our first thing that we probably will look at is just plain volume. We like if there's a lot of flow, and of course we especially like retail flow. So if there's more retail flow, we will probably be more profitable. So we will go there first. Now, for us, of course, this is the coin margin BTC USD swap on Huobi and the BTC USDT swap on Huobi. So that's really just basically that's it. I mean, we're a very small team, and our strategies, they need some work to make them work for different symbols. So we first always concentrate like on the ones with the most volume, and then we start spreading out to the smaller ones. But really, we basically just go by volume. Whoever has the most volume will be served first.
Okay, so Christian's all about volume and retail flow. What about Professor? What do you think?
Yes, as the CEO Christian mentioned, from the traders of high-frequency trading, as well as the artificial intelligence trading, we look at the trading volume as well as the order book. So the most important, the physical parameters are the fee ratio. So we have examined the fee ratio for various derivative products, and then the future market, the quarterly future market is highest, the fee ratio. So from the high frequency trading and then the AI, artificial intelligence trading, this fee ratio of the futures, the Bitcoin, Ethereum, or Link, are the most important quantity. Now, next important quantity is the thickness of the ask1 and the bid one in order book. If they are too thick compared to ask2 or ask3, or the bid 2 or bid 3, then they are obstacle, hindrance to the market price changes. That occurs in the swaps of the Bitcoin. The Bitcoin swaps have A1, S1, and bid1 like millions, while the order books of the future has 1,000. So there is about the 1,000 times much harder to move in another Bitcoin swap. But that nature is not shared in swaps of Ethereum. That I didn't understand the logical reason why. But the phenomenological observation of the Bitcoin swaps is they tend to they stuck to the one price without moving, while the Bitcoin future prices fluctuate around. So that's much harder to trade in a Bitcoin swap because of very thick A1 and the A2 volume compared to the higher and the lower order book. So what kind of instrument do we employ? We measure all the instrument and measuring the fill ratio, and then we measure the ratio of the S1 bid1 compared to the higher A2 and the higher A10 and the bid2 and the bid10. So by measuring these two physical parameters across the various portfolio of the Bitcoin, Ethereum, Link, EOS, and then they will choose the instrument. But that changes, of course, so in time. So we adapt our strategy depending on the change in the Huobi market. Thank you.
That's very informative. I talk to a lot of institutions all the time and listening to their feedback, their needs, and their that's why we've been always putting 100% of our energy to develop new products, because they've been telling us about this needs. They need different kind of products to trade for derivatives market, and it's always good to hear about your feedback. So as a result, we've been designed a lot of innovative functions to save users transaction time and cost. So recently we have launched a cross margin function for our USDT margin swaps. So 10 major currencies that support this model can all support real-time settlement. So what do you think of this function? And do you like it? Do you think it provides more choices, convenience to run your strategies? And also, what new features do you hope Huobi Futures will be introducing to the market in the coming 2021?
As I mentioned slightly earlier, this USDT swap market have a very strong potential because of a cross-margin mode. Because if we are interested in a mean divergent technique of various trading instruments like Ether and the Bitcoin, or some other one like EOS or ETF, they have a very strong correlation. But there are other times slight fluctuation due to different market participants. So the very good strategy is that the pair trading, that assuming they go to the mean divergence. So in a pair trading, as I mentioned before, you have that we have keep more or less data neutral all the time. So when you compute that the liquidation price, that the liquidation price is almost unlimited, because that the combined system of long Ethereum and the short delta is zero. So since you compute that the liquidity price based on this combined USDT, it is an extreme opportunity for traders who trading based on this cross pair like a statistical arbitrage. So I think they will attract a lot of traders who use this kind of statistical trading technique based on the artificial intelligence and then the high frequency trading. So we'll combine both mean divergent technique and then also that the high frequency trading technique as a market maker. They will give us a lot of opportunity, but they will also give the Huobi a lot of opportunity because we add a lot of trades and we add a lot of the order book. So they will make the order book very thick, very liquid, as well as the trades are very huge. So any hedger or any retail traders looking at your USDT swaps trading, they will be attracted to the Huobi because of this thick liquidity and the large trade. Thank you.
So I think Professor Ingyu already said most of the points about the cross-margined function. So what I would like to see for Huobi, it's probably not necessarily new products. Of course, they're great. There's probably still room to add more volatility products. But what I always like to see is just a general unification of the interface, of the APIs. It would, of course, be great to use the margin that you have across all the different products so that you can use your margin or your collateral rather on quarterly futures and on swaps or on options or whatever. And I think this is something where a lot of crypto exchanges still have room to improve, especially with the APIs. We still sometimes have a little bit of a problem knowing the exact state of the book and of the order pools. So I think there could be some improvements there in the future. Otherwise, if there's like volume, like it's been in the last couple of months, we're really happy. So the more flow and the more volume, we're happy.
Thank you. Thank you so much for your feedback. And those two things are definitely on our roadmap. So first, we are starting a new API tech support team. So that's definitely something that I want to improve for sure for all of our clients. And also, the united more united interface. I think that's definitely a problem that we're having. In this past 7 years, we are 7 years old. We're like ancient in the industry, but such a baby compared to traditional companies. And it's like a child growing so fast and running so fast. And a lot of our different BU are all working together and creating different stuff. So it's like it's growing like a tree. And now it definitely needs more tailor. And we are fixing it. And we are we noticed it, and we really appreciate your feedback. And I think in 2021 you're going to see a much better interface from Huobi, and especially meeting the needs of our overseas community in the Western market. I thank both of you for your support, and we'll continue to improve and listening to your needs and providing better services and products to you guys. So thank you very much.
Thank you.
Thank you.
Yeah. Okay, so that's all the questions I have for our guests today. And we have 3 questions from our communities, and I'd like to answer them today in this episode. So I'd like to say that in the turbulent market, what we need to do is protect our loss-making users from liquidation and to ensure that our profitable users to gain all the profits they earned. So we are the first digital asset derivatives exchange in the industry that supports a 3-phase liquidation protection mechanism, and no transaction fees will be charged to partial liquidation. And moreover, we use EMA as a second reference for forced liquidation. So due to our mature risk control system, which is designed by traditional financial leading companies, engineers and the staff, they've been doing risk control in the traditional finance market for years. And we're proud to say that they've been able to hold a record of 0 clawback since day 1. And we promise that this will never trigger as long as our insurance fund is positive. And another problem is that many other platforms has set up a automatic positions reducing mechanism. So though they claim to have prepared a large amount of insurance fund, there are profitable users who are forced to lighten their positions from time to time. It's a very common sour point in the crypto derivatives market, but This has never happened and will never happen to Huobi's users. We promise that the platform will never reduce positions of profitable users as to ensure that our users could get all of their profits that they earned. Okay, so first of all, I don't think we're gonna be focusing on a particular certain product only in the next, year or decade. Once we launch a product, we have to be responsible for the whole ecosystem and all type of users that's using this product, all the way from market makers to institutions and to retail. And we just have to maintain the same type of risk control system and to protect our user from suffering from unnecessary loss, and maintain our insurance fund, and also working on order book dApps and liquidity and all that, trading experiences. So we'll be focusing on all of the products and keep improving them of the products we launched, and we'll continue to enrich our product varieties. As you can see, all of these products we make what we are today. And when talking about their strategic position, I like to say that each of them have their own advantages. So coin margin futures have 4 expirations, and therefore traders could combine their holdings with expected price to diverse their trading strategies, and which are very suitable for miners and hedging users, where coin margin swaps has no expiration date, meaning that user can hold them as long as they want. And for option trading, option buyers could earn a profit at a very, very low cost and have no risk of liquidation. And in USDT margin swaps trading, investors can trade a variety of different swaps with only USDT and never have to worry about fluctuation in margin volume or to manage multiple tokens. So all of them have their own unique characteristics. And what we will do is to continue optimize them based on our users' feedback and suggestions. So yes, we do. For our recently launched USDT margin swaps, if you have activated the USDT margin swaps account and have assets worth of 30,000 USDT in this account, you'll be qualified for a VIP for this product. And the more assets you have, the higher the VIP level you could get. So in addition to that, we also introduced an upgraded VIP sharing program to celebrate our 2nd anniversary for Huobi Futures and to give back to our users. That is, VIPs of any exchange, any other exchanges are considered at Huobi Futures VIP +1. So users could provide certificate of VIP level on other platforms to apply for a VIP +1 level for Huobi Futures for coin margin swaps and coin margin futures trading. So in this New Year holiday season, Huobi has many activities ongoing for your options. Now, Trade USDT margin swaps to win 1 million lucky draw campaign is in the progress. So if you are interested in it, don't hesitate to join us. Thank you so much for joining us on this Huobi Insider Huobi Futures episode. And the Chinese Lunar New Year is coming up, and I wish you guys all had a very great New Year holiday. And I'll see you guys in the next episode.